Good morning, everybody. In this video, I would like to show you one of the most extreme markets as we are dancing at historical highs with the institutional bullish bias. So please take a look at the accuracy of the method. As we're discussing with everyone, this is counter trend bearish move. Why is it counter trend? Let's dissect the markets. As to the downside, extremely important moment, 22.91 and a quarter. This is what we accomplished so far in the room, and this is what you learn in the course. Knowledgeable trader buys as low as possible. Trading room being open only 4 hours. This is crucial decision point 2, where yesterday our bias was bullish. And this is where trade had ended, reminding you, if you know the rules, if you know where your entry is and where your target is, you know where to enter, you know where to exit. This morning we came in market at historical highs. If you're a day trader, you're utilizing this chart as your day trading chart. This morning, at the open, our bias was bearish, but I said to the downside, this is key target. Yesterday morning, it was key target on long. This morning, it was key target on short. And then long from here. And this is what's happening right now. And this is what we're dealing with. Market sitting at historical highs on S&P at exactly same level. Decision point 2. This is weekly chart that's been present in front of you for years. Exact same level as you're sitting on hourly guiding light day trading chart. As we discussed, we're dealing with quite a pickle. We're dealing with exhausted buyers and weak sellers. Only if this support is broken, market will head lower. And if you choose to short this market, you better pay attention to this level, as it is counter trend move. What S&P will do at 22.91 and a quarter is absolutely crucial, as this is key support of the counter trend move. And this is exactly what happened on Apple. It's exact same Fibonacci level. This is where price collapsed to, despite stunning earnings. This was Fibonacci reversal zone. But this is where I said Apple would rally from, despite worst earnings in 13 years. And this is where Apple is heading to. Exact same level where you saw bias on S&P yesterday morning was bullish. An exact same level that we're watching very carefully now. Only if S&P will crash and burn through this level, selling pressure will pick up this steam. If not, this is very aggressive counter trend, bullish move, bearish move, stock as expected. And that's what separates knowledge from being a follower. We are stuck, as we know we would. Institutional bias, despite historical highs, remains bullish. If S&P will break through this level, it's heading drastically higher. If you're investing long term, you're never acquiring position into this level. As you're witnessing on each and every trade, it's a key Fibonacci target. But first things are first. This was key level to the upside. This was the end of the minor trend, taking S&P 6 months to break through this level. And here we are. Will S&P crash and burn? If not, counter trend move not getting very far. As I continue warning you, we're dealing with very dangerous market structure. So ladies and gentlemen, please take a look on this trade. Here we are an hour later. Take a look at the importance of the stop. S&P moves in quarters. To the tick, price never touched the stop. An hour later, extremely aggressive counter trend move, market finally moving. Here we are, decision point 1 present in front of you. Every trade, different stop and different target. Knowing where to enter and knowing where to exit is everything. Here we are. If price is blasting through this target, next level 22.90.50. Where to enter and where to exit, you must know the rules for. I warned you, we're dealing with historical highs this morning. Long trade to the upside, short trade until this target. And here is another short that we've been babysitting forever. Market is moving. Decision point 2 next. Pay attention. Will it finally go into free fall? Did you play by the rules? Did you place your bracket order properly with stop limit order? Did you place your stop properly, understanding that S&P moves in quarters? Market moving. Decision point 2 is everything. Here's a reminder what we've been dealing with. Yesterday morning, decision point 2 to the upside was a key target. This morning, it was a key target to the downside. Here we are again on its second short. Room been open 5 hours, trade number 5. We've been dealing with horrific market conditions. Key moment on S&P, this level is out, market will collapse drastically lower. This is where you're moving your stop at break even. This is what you've done on previous trade. Understanding extremely clearly that proper stop placement is everything. Proper target is everything. Accuracy is the key. It's all hinges on decision point 2. Right now, next. This is your hourly support. This is the key. If market is not breaking through this level, you will see another bullish push. Monitoring for a fill at this level is everything. Ladies and gentlemen, after ultimate babysitting, market in free fall. Clear on that? And that's the importance of playing by the rules, and that's the beauty of knowing Fibonacci rules and Fibonacci levels. What you're witnessing in front of you is the accuracy of the method I developed in 2008 after questioning the value of stocks that had solid fundamentals that crushed completely. This is the same exact accuracy you're witnessing in day trading room. On short-term S&P, exact same levels I use when I work with hedge funds and institutions. Except when I work with hedge funds and institutions, we're working on ETFs, we're working on stocks, we're working on SPY as index. Tomorrow you will witness oil. Tomorrow you will witness this chart and the accuracy of the method instantly. That's the reason I like oil news. Horrific news. Price set reversal zone, your bias bullish. Price comes to Fibonacci resistance, your bias is bearish. I promise you, it never gets sold. Another horrific bearish oil news. Another bullish rally on oil, and here we are. Institutional resistance. Anyone surprised? Should not be. That's the reason I love oil news. Trail very carefully. We've been open only 5 hours this month. Trade number 5. Your trail at 22.92. Will market reverse completely from this reversal zone? Market will give us some sort of pullback next. But I expect S&P at drastically lower levels because hourly support had finally been broken. Market heading to where we monitored for longs yesterday morning. Exact same level where euro is dancing for the last 2 years on monthly. All the same formula. What you trade, absolutely up to you. This is euro. This is post from 2015. Looks familiar? Euro still at this level at 2017. This is where S&P is heading next on hourly, back down to where we were yesterday morning, where S&P respected this level for almost 20 hours. Market in free fall. Enjoy the collapse. Being a follower in day trading never an option. Knowing where to enter, knowing where to exit, knowing where your stop and target is everything. First time in months I have an opening for private mentoring. Thursday and Friday, however, booked until May with mentoring students and hedge funds. What you trade is your choice. So if you're lucky enough to join us in Fibonacci course in the months of February and in the months of March, we are down to 14 spaces, potentially a lot less. You will learn the rules for exact trade you just witnessed in front of you. Exact trade that finding pullback as expected at reversal zone. Many points later after ultimate torture on this very dangerous day. And that's the accuracy of Fibonacci levels instantly in front of you. And that's where buyers coming as expected to the tick. The levels had been present in front of you for the last few hours. But knowing if price reversing or not, you must know the rules. And that's the power of Fibonacci. All the levels in front of you are proprietary Fibonacci levels. I do not use standard Fibonacci levels. I do not use any speculations. Rules are the key for every single trade. Doesn't matter if it's ETF, doesn't matter if it's Apple, doesn't matter if it's S&P. What you trade, absolutely up to you. So when you come to the website, I highly encourage you, my favorite time of the website after you review the information about the bootcamp, always and forever, is what students have to say about course. What students trade. That pure and that simple. Would you like to trade options? Would you like to trade S&P? Would you like to trade Forex? Anything you will choose. Absolutely up to you. Any questions? Never hesitate to contact me. 925-257-4298 or info@fibinstitute.com. Bootcamp part of the course. Savings of $888 for new February and March students. Are you surprised about bounce between reversal zone and this Fibonacci level? You should not be. This is what happens each and every time. Doesn't matter if it's monthly, doesn't matter if it's 4-hour chart, doesn't matter if it's ETF, stocks or options. Formula remains the same. So here's picture perfect reminder of the importance of moving your stop and trail outside of Fibonacci resistance. Are you witnessing this? Market stuck at reversal zone in bullish correction. The importance of proper stop placement and proper target is everything, no matter what you trade. Absolutely no surprise whatsoever. S&P reached reversal zone and you're witnessing bullish correction. Absolutely no surprise whatsoever what S&P done where it started the bullish rally from reversal zone on February 2nd. So, if you know the rules, you know what to do. If S&P will crawl down to here, but first things are first. It's this Fibonacci reversal zone that must be broken. If it's not, market will reverse. And that's exactly why you know where to place your stop and where to place your target. And that remains the key. And that's S&P. And that's the importance of playing by the rules. Always and forever. No matter what you trade.